what others are saying, right? You got to be extremely careful about not getting manipulated out of your positioning or your thesis, right? Because the sentiment is the most extreme at the extremes of the market. So at market highs, it's never been more optimistic. It's never been more bullish. It's never been better to invest by sentiment. At market lows, that's where, oh my goodness, are we in a bear market? Like, are we done? Is this the end of crypto? Is this the crypto winter? And again, sentiment follows price. Look at this, right? Dow 36,000. Why stop there? An article from October 2nd, 1999. The stock market bubble that is likely to go on floating. March 26, 2000. Right? Look, September 27th, 2000. No, right here. December 20th, 2001. Cure for a burst bubble. Another bubble. Right? This is your, what do they call it on the psychology? Hold on. Sorry, guys. I'm just trying to find the name of this. Denial. That's what I wanted. Just get that in there. Here. Sentiment follows price, right? So, okay, this article, December 20th, 2001, right? So the market already starts dropping, right? It dropped more in 2002. You can see cure for a burst bubble, another bubble, right? And that's maybe the denial or the complacency stage, right? This is the Wall Street cheat sheet. This is the psychology of the market, right? Bam, we start growing again. Dow hits new all-time high. Subprime is contained. Goldilocks economy. Right before the market burst, right? Everybody's saying the market is great. It's a Goldilocks economy. We've never been stronger, right? Here we go. This market is cheap. 2013. Yeah, it's pretty good. Goldilocks economy. They were right about that, right? Why 2013 we'll see the economy explode higher. I'll give it to them there, right? Let's see, I'm trying to go chronologically here. Okay, so here's 2014. Plenty of room for this bull to run. Okay, they were right. Because, I mean, we were in a pretty sustained bull market from like 2010 all the way into 2020, pretty much. We had some small periods of down, right? The Fed has your back, which they did the entire time. Now is the time to buy stocks in 2016. Dow 20,000. Dow 150,000. Kramer, skeptical investors keep bull market going. 2019. The case for the bull market 2019. Can the bull market last 10 more years? 2019. Right? S&P 500 ends 2021 with 27% gain. Stocks plunge most since financial crisis. When will this bear market end? This is already October 8th, 2022. Somebody was calling it a bear market, right? Like, market was already recovering here. Bear market confirmed. When you're at pretty much the bottom of the bear market, are we still in a bear market? 2023, right? And again, fastest bull market since World War II. Earnings will drive bull market higher. Stocks are in a bull market. So, you know, there's a lot of like, you know, news follows price. Price follows news. What came first, the chicken or the egg? You know, it's interesting. Now, ideally, you know, the market does go up over time, almost always. So there's that. But again, when you see crazy movements like what we saw in silver, you just have to really like protect yourself. Don't go rushing in at crazy highs like that, right? Wait for it to come down like it did with anything. And right now, crypto is at the deepest discount we've seen it in a very long time, right? I'll go. Let me see. Crypto is where it was just a year ago. Where is it? Yeah, where it was just a year ago, right? Which back here, when we're up here, right? Everybody's looking at this like, man, I wish I got more stuff down here, right? But when we're back at those lows, everybody's so scared, you know? And I'm not saying the market's going to go up. I don't know what the market's going to do. It's just interesting. And yeah, so this is another thing is right now there's a lot of expectation in the market, high expectations in the market for earnings, and specifically, yeah, year over year earning per share growth relative to consensus expectations. You can see expected is the blues right here, and the actuals are right here, right? So for a very long time, and this is why the market, the stock market has been growing at the pace that it has, is because we keep being surprised by how much these companies are growing. You can see last year, right? 2025, all the consensus versus the actuals, right? And right now in January of 2026, we're getting a lot of the earnings of Q4 of last year, right? And so there's a pretty big expectation. But look at the expectations into this year, right? Now, this is where when the market has an expectation and you surprise me and you beat my expectation, I then go and I buy more of your stock because I did my math wrong. But when I have an expectation and you let down my expectations, that's when the market can react negatively, right? Now, that's what we got to be careful about this year because right now we have a lot of expectations for 2026, right? Which we're not going to get the earnings for 2026 until Q2 of 2026. So we always report the quarter prior. So after March, we're going to get earnings for Q1. Yeah, that's February, March. So in the summertime, depending on how earnings go, right, we either beat the earnings. If we don't beat the earnings, especially the Magnificent Seven, right, the big ones, Amazon, Nvidia, Microsoft, Google, Apple, if we don't beat those earnings, the market might not be as fruitful. Okay? And you can see the year over year earnings per share growth estimates, right? This is a bottom up consensus, which means right now they're expecting for the 493 companies below the 7 largest companies to grow more of their earnings than the Magnificent Seven. Again, large expectations due to AI, productivity, faster labor, right? Cheaper labor, growing profit, all of it. So let's see how it goes. But again, this part of the market, I'd say, is more correlated to the altcoins in the market as well. Okay. And we had some news come out today that the market really positively reacted off, which was ISM, okay, which was looking at, hey, is the economy growing or not, right? And you can see from the last reading that we get this every month. From the last reading, right, if we're below 50, it means the economy is contracting. And we had this right here, which was manufacturing PMIs on ISM. Almost skyrocketed. We came in at 52, which we haven't been at since September.
There's no
Check. All right, we're back. Thank you for that. Thank you for that. All right, so you didn't lose me for too long. Yeah, but I was just saying last year we had the hard data, which was already really good, but it seems like soft survey data takes a little second to catch up, right? So we just had that catch up, okay? But again, markets like this because an expanding economy is good for the stock market, which hopefully is good for crypto, right? But yeah, so we had really good data come out today. That's why the market kind of pumped. At least, you know, the S&P did, the NASDAQ did. And I think it's a rising tide that does help crypto. It's kind of like when everything's dumping, everything dumps, right? When the stock market pumps, at least it kind of holds up the dead weight of crypto to some extent. But it also, I think, is setting up for, we've just seen many trillions of dollars get added to the global market cap from the stock market, from metals, right? I mean, look, silver is still $80, right? It was $50 like 3 months ago, right? So it's still up, right? It's still, I think I saw an article, I think it's still the best performing asset year to date, even with the amount it gave back, which is pretty crazy. But that's a lot of money that will likely want to rotate into something more juicy, right? And again, if you have a Fed that lowers interest rates, that sets up a lot of risk on behavior, right? Like they don't have to print money to make prices go up. They can just lower interest rates and then everybody pulls out of bonds and goes into the stock market or crypto because they want to find yield, right? And again, what we're seeing also is this start to potentially bottom out and maybe resume up. Now with Kevin Warsh, he's not a fan of raising the balance sheet so much. You know, we thought, hey, it's QE to infinity again, but maybe it won't be. I mean, you can see the balance sheet is still significantly bigger and larger than it was pre-2020, right? Like in 2020, it was at 4 trillion. Now it's at 6.5 trillion. So that's a 50% increase, even with all the tightening they've done, right? So there's still a lot of work to do, maybe, you know. And another thing that we've seen, which I think I forgot to put this in here. Yeah, I forgot to put this in here. Let me just, I saved the picture. I just forgot to include the picture. Where's my picture? What? There it is. The picture I wanted to see. All right. So with this, right, again, balance sheet expanded so much. Guess what? Inflation went through the roof, right? Because this is like real money printing, like real reserves. I mean, man, I got so much business credit back then. I got so much credit. I know a bunch of people bought homes in 2020. Like money is just created out of thin air. PPP loans, stimulus checks, all of that's inflationary, right? It was pretty crazy because from 2010 until 2020, nobody talked about inflation. You know, like people, yeah, knew about it, but it wasn't as big of a like topic. Now everybody talks about inflation. But there's also this other thing called trueflation, which they basically do their own independent measuring of inflation, and that's been falling like a rock, right? Like this came in today or yesterday. US CPI inflation dropped significantly from 1.24 to 0.86%, 0.86% in our independent price data, the lowest since 2020, which is crazy. So things are deflating actually, right? There's some deflation in utilities, clothing, housing, transport, potentially food. But this usually comes out before the real CPI. So this can be a real big catalyst as to why the market wants to go higher, right? Because when you don't have a lot of inflation, the Fed has a lot more room to lower interest rates, right? The best way that it was explained to me is if inflation is up at, let's say 10% like it was in 2022 or closer to it, right? If inflation is at 10%, but the interest rate is at 2%, right? Like you're going 20 miles an hour while inflation is going 100 miles an hour. So if you want to catch up to it, you have to raise interest rates, right? And that's why they do that, because it like is a counterbalancing force of inflation. You have really cheap money, you have very low cost, you have a lot of stimulus, you have a lot of lending. You go out, you spend that, businesses increase prices because now they have more demand, right? And that becomes inflation. So yeah. And this is good, because this gives a lot more runway to Kevin Warsh or even Jerome Powell while he's still in office while he's still chairman to lower interest rates, right? They want to do that. They do that. Again, there's like a wall of money. We can take a look at that too. What am I looking for? This is the biggest bubble, bigger than your AI bubble. And it's called the money market funds. You go to Fred, to the Federal Reserve. Check this out. This is the biggest bubble we've ever seen. Look at this chart. It's going parabolic. You saw what silver just did, right? You saw what silver just did. It went parabolic and then it crashed down. This could potentially crash down too, right? And what this is all the money in money markets. And what's a money market? It's a place that invests in bonds. What's a market money, huh? What money market? Let's see if it knows. Financial market for short-term borrowing and lending, typically involving debt securities with maturities of 1 year or less, plays a crucial role in the global financial system by providing liquidity, enabling governments, corporations, and financial institutions to manage short-term cash flow needs. So when the interest rates go down, all of that money then runs to return, right? It wants to find returns. And if inflation is down and the Federal Reserve lowers interest rates, that was $7 trillion that we just saw that could find its way into other markets. And they usually go for the risk. Okay. Now we're going to go over some vaults. Okay. Specifically the Leos and the Geminis. You can see here Leo ETH in the last month is down 4%. It got chopped out of just one long trade right here. It got stopped out on a long trade back during the beginning of January, again, when the market seemed like it was potentially going to go up. But it's cool because it's in a position of power, right? It's in cash. Leo Solana also got chopped out of a trade. Took a pretty nice stop loss here in the middle of January. Went long and then unfortunately got chopped out, but it's been out of the market. And again, this is down 8%. The rest of the market's down like 30%, right, in the last month. So not the best returns, but they're in cash. They're protecting. They're in defense. Gemini Solana took the same long position that got chopped out, and then we switched to Gemini V4, and V4 also took a small loss. Now this loss was way smaller than this loss here because this was still V2. This is V4 now. So again, not the best return, down 10%, but it's managing its risk. It's doing the best with the momentum, right? Now, here's our Geminis, our flagships here. We could say Gemini Bitcoin potentially is a flagship of ours now. Closed a 13% month. Pretty awesome there. You can see 13% in January. Now it's in another short trade against Bitcoin. So deposits are closed right now. And here's Gemini ETH. that closed a gigantic 19% month, almost 0.06% short, but almost a 19% month in January. Huge returns from Gemini ETH. As you can see, it was preceded by 4 months of down and chop and grinding. And now we get that explosive month, right? It's like that, you keep getting heads every time you flip the coin. You're bound to get tails at some point, right? And again, it shows that these moments are the best moments to add to your position, right? It's to add to your potential investment there, right? Because it's getting chopped out. And then we upgrade to V4, and V4 shows, hey, look, 18.9% on ETH, 13% on Bitcoin. Now, is this going to continue? Right? It may or it may not. Who knows? Maybe the market just gives us the perfect conditions and we make 13, 18% every single month. But remember, the average, the CAGRs on these, if you look at the last 4 years, are about anywhere between 50 and 70% per year. So, and that's not guaranteed. Past performance is not indicative of future results. Okay. But we're seeing that the proof is starting to be in the pudding. Right? Now, remember all these Geminis, all these Leos, 2 supernovas per vault. Okay, we're past the first. So now it is 2 supernovas per vault. If you're interested and you have not been whitelisted, you do need 2 supernovas. Okay. So just note that. Okay, now they're really cheap. If you go to OpenSea, there's really good deals out there. I think we're going to extend the buy 4, get 1 free if you go to OpenSea until the next Inside the Vault, which is 2 weeks from now, because this weekend is going to be the event at the Arc, and then the weekend after we're going to do Inside the Vault. So until that Friday, if you guys want to sweep those 4 supernovas so you can get 1 for free airdrop to you, go to OpenSea, go to the Managed Vault channel. You'll find the links. There's even tutorials there that I've recorded on how to buy off OpenSea. But again, remember, right, that's to get you into these Geminis right here. These could become our flagship strategies. And also, every time that we cross the milestone of another dollar, that adds another supernova that you need. So when we're at $2, that's going to be 3 supernovas for Gemini ETH, right? We're only 50 cents away. Gemini Bitcoin, same thing. If this is $5 one day, because that's how good this algorithm was, no guarantees. I don't know what the future holds. But guess what? It's going to cost you 6 supernovas. At $5, it's going to cost you 6 supernovas. That's where you can see the utility of this ecosystem that is being built, right? Now we have 6, 7, potentially more strategies as the time goes on, right? But right now we have 7 solid strategies. So Leo Bitcoin, Leo ETH, Leo Solana. Those will be a little slower potentially because they don't trade both sides. They've been very quiet. But then you got Gemini Bitcoin that just did 13%. We got Gemini ETH that just did 19%. We got Gemini Solana, which, yeah, it started a little down, but they all take losses as we've seen from Gemini ETH, right? That's just normal. Drawdown is normal. Nothing out of the ordinary. But yeah, go get those supernovas. I don't know how long that floor is going to stay as low as it will stay. We got some time, but maybe we don't have a lot of time. Okay. And you saw what silver did. You can only suppress something for so long, right? And then cat's going to be out the bag. Everybody's going to be like, whoa, this is crazy. These are amazing strategies, right? And I think after like $1 million of assets, we may even close the investment, depending on if we have enough liquidity to continue, right? So just keep all that stuff in mind, you know? And you can see here's Leo Bitcoin. Leo Bitcoin is up 6% in the last month, which is nice too. It had some really nice trades on Bitcoin. You can see this was V4 right here. Closed a profitable trade on Bitcoin. up 6% in the last month. And Leo Bitcoin bull run. Again, this is more of your like hodl type of strategy, right? It's not there to trade so frequently. It's just there to, hey, if Bitcoin's in a bull market, we want to be in that, right? Bitcoin hasn't been in a bull market since October. This hasn't been in a trade since October, right? That's the mentality. That's the framework. Here's the strategies right here. Just the Geminis, because all the Leos are on the sidelines, right? We got Solana, took a small stop loss here. It takes a very small stop loss on the short side. Solana's up now. But ETH, you can see here, up 27% in profit in one trade. Crazy. And here you can see Bitcoin is up 3.4% in profit on the downside, right? Pretty nuts. And even Cardano is up 5.6% in profit, I think. Oh, no, that's a 5.6% unrealized loss for now. But it was preceded by 2 profitable trades. And here's the stocks. The only one that's in the market right now is NVIDIA. Okay, flat. It might take a stop loss. It might keep going, but that's the only one that's in a position. Everything else is sidelined. So I'm really happy. I have a nice cash position in my Roth IRA because I trade a portion of that money with these stock signals. And it's cool because when the market's so down and painful, I'm like, yes, I call these the Libras. The Libras are saving me, you know, because the stocks have been out of the market since like October, you know, no trade. MicroStrategy took a really nice short trade, right? Tesla's been out since October, or really since December. It took a look. It even took a profitable trade right here. That was in between November and the beginning of the year last year. Tesla did get into a profitable trade, did close it for a profit, which is nice. NVIDIA's in the market now, and iBit is out of the market, so pretty cool. And that's everything. That's everything. So that's all I have for y'all today. I do have to run. I have another meeting I need to get to in 1 minute. So I hope you guys enjoyed Market Monday today. Let me stop sharing my screen. Have a great week, everybody. I know it's a big week at the ARC. There's going to be a huge event this weekend. Go ahead and get your tickets if you haven't already. And yeah, there's a lot of cool speakers lined up, and get your supernovas too. You heard it from me. We're going to extend that buy 4, get 1 free until inside the vault. So you have another 10 days. And yeah, that's all we got. Let's go. Have a good week. Stay safe, everybody.